welcome to the Closing Beat, everybody. Happy Friday. Hope you're having a good day here today, despite what happened in the stock market, but we'll cover all of that. We're financial advisors here at Jazz Wealth. We literally take the power out of your hands to make emotional decisions. And if you've been watching the stock market this month, you may be enticed to make some emotional decisions. We hope to stop you from doing that. Be sure to check us out at jazzwealth.com. We manage our own portfolios. We mix them together. We do portfolio updates for you so you know how we're investing for you. You get to see everything. And actually, our portfolio and stock market update, our detailed one for customers, comes up next Thursday. And if you've never seen anybody mention anything about it, it's quite detailed. We go into, keep it short, but we go into great detail there. Anyways, let's take a look at the stock markets here today. Bottom right-hand corner of your charts tells the story. Really, you don't need to see much else after that. See, there's a red dashed line. That lets you know where the markets closed the day before. Today, we started way down here, and nobody wanted to take any risk going into the weekend. Why would you? If you're an active investor, a portfolio manager, why would you put on new positions at this point going into the weekend when Trump's tweeting away and, you just never know what's going to happen there. So last day of the week, last day of the month, you could just see nobody wanted anything to do with the market. A lot of selling that you could see in there, but not a lot of buying. So volume was about average, just a little bit slightly higher than average. But nonetheless, you got the Dow down 355, S&P 36, and the NASDAQ 114. You basically had a handful of news, really. The major headline was Trump tweeting that they were going to do tariffs on Mexico, starting at 5%, and then going into October, if they had not sort of helped with the immigration issues over there or had come to the table to talk, it was going to go to 25%. That hurt a handful of stocks here in the sector. We'll cover those as well. But if we go over to the charts real quick, in the dojo, if you're one of our customers, you have this as well. You can follow along with me if you like. You just log right into the dojo. It's the first page that pops up. S&P 500, we're breaking through the 200-day moving average. The SPY hasn't quite shown that yet, but it is breaking through. The index itself has at least pushed below the 200-day, which I don't mind so much. We talked about that being more of a rubber band and less of a sort of a line in the sand. But with the last day of the month coming in here, you got the month of May pretty much in a straight decline. Minor little bounce there midway through the month. That'd be the worst May now in the last 7 years. You got to go back 7 years to find a May that was worse than that. And to kind of put it into perspective, you look in the S&P 500, if you remember December, that was a 10% drop. That felt a lot worse than this has here. This is about a 7% drop. You also had some news out of China. Their manufacturing numbers are coming in lighter, which is hinting that the trade war thing is starting to really take effect over there. And what I mean by that is just that companies are moving elsewhere, which they already have been for years and years, just because labor is so expensive for your basic sort of textile type stuff. Everybody's doing better and better in China, and so they don't want to sew shirts and shoes and such. So a lot of people have already been moving to other countries. Where they've been moving? Taiwan, Bangladesh, and India. So this most recent round of trade wars, you can already see, if you're familiar with the regional sort of ETFs, if you looked at Taiwan and if you looked at India, well, actually, we should be able to do it here. Let's see if we can do it. So India, the most popular ETF is PIN. That's how you can check that out with an ETF. Look what happened in India here. Oh, strong recovery all the way back there. That's pretty interesting. Vietnam is VNM, rightfully so. Hasn't really sold off as much, but you can already see everybody's betting on the idea that India is going to be the benefit of this China trade war thing. Side topic, didn't mean to get off topic, but that's sort of how you could see it on the charts if you like the charts. If you don't know what you're looking at on the charts and you're one of our customers, you can actually go see the candlestick class right in the video library, which is also in the dojo for you. I will quit marketing that. So the S&P 500 down to the 200-day lost 7% on the month. NASDAQ lost about 9%, did recover just a little bit there at the end of the day. So the month of May, if you're a NASDAQ index investor, you lost about 9%. The Russell also lost about 9%, and that one was pretty much telling the story the whole month, but pointed it out like day after day. Why is the Russell so weak? I mean, I get that, and maybe you didn't know this, but nearly half, I believe it's about 40% of the companies in the Russell 2000 don't make any money. So could be some trouble there, and I think maybe that's what people are kind of digging into a little bit, valuations and seeing that they don't actually make any money and yada yada. So we'll get into that maybe in a different video. If you look at the Dow lost about 7%. And we covered this the other day, last week actually. The Dow had officially lost 5 weeks in a row. We gave you some data on that. Well, I thought I'd follow up with that. The Dow's now lost 6 weeks in a row. And the good news is that that's about as bad as it gets. If you follow this sort of data, or you've been sort of playing along with us here, it doesn't tend to get very much worse than that. There's only one time in history that it's lost 8 times in a row. 8 weeks in a row, and only 7 times in history that it has lost 7 weeks in a row. So easy to remember. 7 times in 119 years, by the way. This isn't like we went back just 10 years to see what happened. 119 years, the Dow has lost 7 weeks in a row, only 7 times. And this, by the way, is sort of a smaller decline than what we're used to seeing there. I believe the average was about 9% there. And the last time it lost 8 weeks in a row was 1923, just so you know. So very, very, very rare. All right, so that's the markets in general. Now, when you take a look at the markets here, we'll go over this in our portfolio update with our customers next Thursday, but this pullback here doesn't really scare a whole lot of people. Unless you started investing for the first time ever, you're dipping into the stock market in the month of May this year, unless you're that person, you're not really worried. I mean, the markets year to date obviously are still positive. This is a pullback in the midst of it. So you're not really scaring a whole lot of people. And then if you break it down sector by sector, the semiconductors were your worst performer. Well, we know, I mean, for the month, they've lost over 15%. But they were, year to date, they're still up about 15%. So while you don't want to see it lose, 50% of what it's rallied already, if you are an owner of the SMH or have that in your portfolio, you're not really too nervous there. Energy probably frustrates you. It lost over 10% this month. That leaves it positive only by about 4% on the year so far. Materials can say a similar story. Transports lost about 50% of what they've gained so far this year. Tech has actually only lost about 8% and still up about 17% on the year. So you get the story there that a lot of these things are still higher. Real estate only lost a fraction of a percent. It's still up by about 15% on the year. So, and you can kind of see it on the chart there. So it's not really that type of a pullback where people are going to get super nervous just yet, as opposed to back in December, right? In December, we lost 10%, but we were already drifting lower. So it's sort of like that washout sell-off there. So you may even notice if you're looking through your portfolios, like for example, our aggressive stock fund, all but 4 names are still positive year to date. They pulled back this month, but still positive, and over half of them are higher by 10% or more. They're aggressive stock funds, so naturally it should be. Our dividend fund is very much similar, so it kind of looks like this. Great blast-off start to the year, and the month of May just taking a little break. As I always do, I point out stocks above the 50-day moving average. For those of you that like discounts, 28% of the S&P 500 is above the 50-day moving average. The sectors that have the most stocks above the 50-day moving average continue to be consumer staples and real estate, which we just talked about. You can kind of understand because that index is still very strong. On the downside there, energy is the sector with the least amount of stocks above the 50-day, meaning more aggressive sell-offs there. Almost none of them are above the 50-day moving average right now. In the S&P 500, you had 6 52-week highs today, mostly REITs and Hershey, by the way. If you like chocolate, Hershey made 52-week highs today. 54 new lows, and that was a broad thing. You had everything from American Airlines, you had retail, you had some REITs in there, just a broad mix of stocks that made new 52-week lows today. Energy focused, oil focused, a lot of names in that category. So that's it. Now, if you were to look at the markets and you go, what was the best performer? If I could only put my money in one asset class, and I hate that I'm about to do this, if you could only put your money somewhere in the month of May, where would it have had the best performance? And sadly, the answer is Bitcoin. Bitcoin had the best performance here this month, added over 60%. Like I said, semiconductors were the worst performer. There you are. Pulling back about 50% from the highs there. Is the worst month for this one in nearly 10 years. You got to go back almost 10 years, November 2008, to find a worst performing area of the market. Oil, man, oil was hurt hard again today. We talked about this yesterday on the inventory numbers, big sell-off. Today, another big sell-off there. A lot of money coming out of oil, down another 6%, or the USO 5.5% if you follow it that way. On the flip side of that, you had gold. Good day for the price of gold, shooting up out of this downtrend here from a technical perspective. If you own gold, you're just happy, right? People coming into the fear trade. I pointed out the gold miners the other day as being something interesting. I was kind of hoping it would break down. I know people are looking for it in that 19 range. You just had people probably short that had to cover today, and a lot of people saying, okay, forget it, I'll just dive in, because gold itself had a good day, as we pointed out there. The Mexican tariffs, you know, you can look at Mexico through an ETF. EWW is that. That was the second worst day of the year. Your first worst day, you lost 4% right in here, back in March 22nd. So not a good day, right? By the way, you don't want to see such a strong reversal get erased. But naturally, Mexico taking a little bit of a hit. I believe the peso did as well, but EWW is the ETF for that. We'll cover a few individual stocks. Actually, kind of moving quickly today. Thought I had a lot to cover. Your beer stocks and your rail stocks going to be suffering today. Beer coming out of Mexico. Those companies like Coors. Let's start there. Coors. The ticker symbol is TAP. Ended up finishing positive on the day. You could see the sort of stress being put on that one. Budweiser, not really, not as much. But the beer stocks getting hurt on the day. And that's probably all we need to say there. Yeah, you get why they're lower. The train stock, railroad stocks, that's what I was trying to think of. Kansas City Southern getting hurt the most. I believe it was 11 to about 17% of that company's overall revenues come from moving stuff from Mexico on the rails over to the U.S. here. So down 4.5% on that one. Other stocks in the news, Big Lots with their earnings. There you go. Earnings came in a little better than expected. It was a decent day. 6% on the day. Could have been a lot better, but was pulled down by the market, I believe. They raised their guidance, so a little recovery from that. You can see the steep, nasty little sell-off they had there. Oh, I typed it in there wrong. That's not it either. Messing around here. Come on, man. Dell, there you go. Dell lower by 10% on the day. Missed on revenue. They had earnings as well, but they missed on revenue. Poor Gap. You got the Gap lower by about 10% today. That was one of your 52-week lows on the day. Just a troublesome looking stock right there. Uber, we reported it yesterday. They lost exactly as much as everybody was expecting them to lose, and that was a win, apparently, if you're an investor. They lost $1.01 billion in one quarter. Just the one quarter. It took them one quarter to lose that kind of money. That is intense, man. But relatively, the people were cheering that. Earnings per share came in a couple cents less than expected. Still at a loss. $1 billion to be. Okay, Twilio, we mentioned yesterday. I don't know if you missed it. They're doing a secondary offering here, 750 million shares. And I read into this a little bit more. They're using some of the money to just buy back some of their shares. Now I'm kind of against this, right? I'm not opposed to companies buying back shares if they want to buy them back. But I looked it up. 440 times their forward earnings to buy back their own shares. Is that really the best use of your money, guys? Like, they don't even make a profit yet. Shouldn't we focus on that? If you're going to raise $750 million, you really think you should buy back your shares? So what they're doing there, if you don't know, it's sort of financial trickery. They're going to buy back some of their shares. It's going to make their earnings look a lot better. It's going to make them look like they're on their way to profitability. You know now they're not technically doing that. Oh, you can't argue with their earnings, by the way. But now they're buying back these shares. It's going to make it look like they're closer to profitability. And I mean, I wish the best for them, you know, but we'll see what happens there. All right. Sheet of paper. Where are we at here? And then I'll take your questions if you have them. Monday, we have earnings from Box. Really, that's the only interesting one, I think, on Monday. You also have Fed speak all over. They're coming out in droves. They're going to be trying to warm you up to the idea that they are considering the possibility of maybe having to cut rates. That's exactly what they'll talk about next week. You got Fed speak in the afternoon Monday, and then also Bullard. If you follow Bullard, he always makes the headlines. He'll be in Chicago in the afternoon. President Trump's going to be in the UK, meeting over there, so anything's possible. Just heads up with that. Also, if you're an index fund investor or you're participating in something like that where you're trying to replicate the funds, I know a lot of you do that. Cordova is going to be replacing Floor in the S&P 500, and Floor will replace Realogy in the S&P 400. Little shift around there. That'll take place on Monday officially. And that's all I have. We did it. All right, let's see if you have any questions, and then we'll wrap it up for the week and the month as well. Um, yeah, $1 billion, Ryan. $1 billion. So we'll see. They're going to lose 4.7, I believe, this year is what they're. Is it 4.7 billion, something like that, coming in there? So we'll see. We will see. Let me go back here real quick, make sure. I feel like I missed something. No, we're all set there. We got some really good studies coming up in our portfolio update. That's what I was thinking of there. Really, really good. So we'll see. That was part of what I was looking at there. Not sure how you cheer $1 billion in losses in a brand new IPO. It's a tough one. For their sake, I hope that the economy stays strong. Beyond Meats, by the way, I think they finished over 100 again. They did. That stock almost made new highs again today. Very heavily shorted stock. So now we run into this problem of when it has a good day, how much of that is short covering and how much of it is not? Because it's very expensive to short that stock right now, and there's a big mix of short traders in there. So if they start covering, because it's just not worth the cost anymore, does it sort of support this false rally? That's going to be an interesting one to watch. I think it's already happening if you follow it, but we'll see. Where's the bottom for VLO? Yeah, energy in general, really struggling. Now, the good news is it's doing it quickly. Would you rather have a Band-Aid slowly pulled off or just rip it off when you're not looking, right? That's essentially what's happening. In the energy space, oil right now is ripping the Band-Aid off. Unfortunately, they're ripping multiple Band-Aids off. So you like that it's selling off aggressively. That helps you find a bottom a little faster, only because it'll attract more people to come around and go, well, hey, that's a discount, right? Oh, wow, I didn't know it was so cheap. That's what you want. So it's hard to watch, but look at the S&P 500 in December. All through December, I'm like, hang on. And then the Band-Aid came off towards the end of the year. And that's when people said, well, that's a good deal. I'll go ahead and buy that, and spurred the whole rally there. So you prefer when stocks do that. I hope that helps. Yeah. Crystal, what do you think about buying the Qs on dips as a retirement plan? Any index, right? In a retirement plan, if you want to do something like that or replicate the index, that's totally cool. I'm a big fan of that. I mean, if it's a long-term retirement sort of thing, if you can comfortably do that and say, okay, I buy aggressively when the markets fall. Not a lot of people have the wiring to be able to do that. Like I said, I'm dead inside, so when the markets fall, I go, oh, discount. It doesn't scare me, so I wouldn't be scared either if I were you, no matter what index it is. Yep. If no trade deal, then how long the sell-off may continue? There's probably a line in the sand where President Trump would come up with something. My thought is, and this is totally an opinion, I normally leave this stuff out, but totally opinion here, just because I like to follow it. The Mexican tariffs, that won't be a big deal. We'll come to a solution on that. There's going to be some sort of agreement. Mexico and the U.S. shake hands. We're going to conquer this immigration thing. It's going to be great. It'll all be for show. But that will boost the markets and go, oh, great, maybe these tariff things are working. Markets come up. Trump hits China with the remaining 200 or 300 billion on their tariffs as well there, or imports as well. And that sends the markets back down. So I don't know. I think that's what he's doing. He's trying to use something to show some good news, and then he's going to hit them with China with the rest. Yep. Oh, you had the Beyond Meats and you didn't think it was very good. I have no interest in trying it. I don't know. I'll probably come around at some point, but I have no interest. Their European expansion, I believe that was on Wednesday, unemployable. Yeah, thanks for pointing it out, though. I believe it was earlier this week, and good for them. I mean, that's good news. I mean, yep. What would be your go-to sector if the market continues to drop? I can't actually tell you, I can't say things like that. Just know I'm a discount guy. I like that energy's discounted and one of the underdogs so far. I like healthcare that it's under sort of an underdog, especially going into the election cycle there. I think it adds a little volatility. I'm just one of those types of people. I get excited at the idea of a drop. You know, real estate right now, you cheer it on and you have to have some of it in a portfolio, but you don't get excited by it. It's doing what it's supposed to. It's going up. I get excited by the stuff that drops. So I don't know that there's a go-to sector at the moment. But I do like some of those discounts there. I get excited about that. Yep. Wow. Okay, a lot of questions there. Many analysts are stating the downtrend will continue into 2020. Do you see this becoming the trend for the rest of 2019 as well? Well, notice, and here, this is a good sort of experiment. I talked to a guy earlier today that was upset about his 529. He had it somewhere else, and he just like, I haven't made any money. Like, what's the deal? Is it a bad plan? Is it, what is it? And the non-fiduciary advisor would have said, yeah, that sucks. Move it over here. That's not the right answer, though. What we talked about was the stock market. So we drilled into kind of seeing like, hey, look, you maybe invested at a point in this market over the last year or so where now you're back to break even. And that's the tricky part about this is the markets really haven't done a whole lot. Like they've had these spurts of ups and downs, but just pick a random point on here. Let's go July 23rd, 2018. Let's say you started, that's the first place you started investing. Pretty much at this very moment, you've made nothing. Since July 23rd, 2018, almost a year later, you've made nothing. But you had to be excited for a little bit, then be ultra scared for a while, then be really excited again. And now you're like, well, this sucks. Why would I want to? Investing's not very fun. Now flip it around. You go the person that decided for New Year's Eve they were going to open a new account and start investing, and that was their New Year's resolution. I know a lot of people did that. They're ecstatic right now because they just chose randomly a point in time where the market started to take off. There's so many different emotions in this market right now because it's no longer just a straight uptrend. It's all over the place. So when you have that, you have people every day making decisions. I've lost too much, or, oh no, I fear I'll give back more of my gains. Oh no, what did I do? I just started investing and I'm still losing. So that kind of emotion creates this choppy market. I think it makes it very difficult to call, and I think that's why you have some of the bigger companies saying, to expect less growth, right? Overall, just smaller, like 4.5%, 5.5% returns. It could very well be the case. And all of it is derived from emotion, by the way. It has nothing to do with anything else right now because earnings are all over the place, guidance spreads are all over the place, projections are all over the place. It's all emotion. Where are you at relative to how you perceive the news? And it causes for a lot of excitement. Yeah. Nefarious says, I need one of them towels, man. I'm saving it. I got it close here. I don't know if it's time to start waving it every day. That's just a little bit of a pullback, but I got the towel close by because it just sort of feels like pretty soon people are going to need some towels there. And if you don't know, I send these towels out to customers as they, if they send me an email and they're like, I'm a little concerned, right? We try to help and teach, of course, and then I'll send a towel to them just jokingly to let them know it's going to be okay. Okay. How should you look at something, P&G and McDonald's rising PE, smart money going to safe stocks, becoming dumb money? Well, this is the week that we saw that turn around a little bit. Oh, I'm using the wrong mouse. It's Friday, man. This is the week we started seeing that as a whole, the more of the sell-off. Your consumer staples stocks, normally those are the ones that sort of kind of hang in there. Really, the only bounce this week came from, Treasury yields? And gold here late in the week. So it's a little different scenario. You almost have everybody that started in consumer staples and things like that thinking that that's where they needed to be, and now they're just pulling the plug on everything. Makes for a good pullback in consumer staples, by the way, but I'm sorry, I have no idea if I even answered your question, and now it's gone. I'm sorry. Okay, I love it. I love it. Well, look, that's, I think, all I have for you here. I'm going to get ready for our portfolio update. Is basically the time for our customers. Once a month on a Thursday night, we do an update about not only the stock market, but the portfolios. And that's really our chance to show all the studies that we have. And I really, really love to go back and say, we were using this data, here's how it played out. We're now going to use this data here, and we'll go with you to see how it plays out. In addition to being able to let you know, in a short way, where really the markets are at. What are the main talking points that will go into the next month? And I think that calendar that I shared with you guys last time, I think I'm going to finally have it where I can send it to you if you want it. We have a very interesting calendar that we showed last time, and I'll be able to share. Anyways, that's what I have for you today, and. There was no class last night. And by the way, if you want to know when the classes are, you just want to see what we're going to talk about, click on events right on the website. You don't have to be a customer. If you just want to see what kind of things we talk about, they're usually a few weeks ahead of time on there, so you can at least see. There was no class yesterday because we had Mr. Josh here, and I wanted to make sure we got the most out of him while he was in town. So we'll see. Oh, no, going forward, next week there'll definitely be a class, so it'll be the portfolio update. I will be ready for it. In the meantime, I hope you guys have a great weekend, and yeah, covered it all. Enjoy. Talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.